Alright, hi guys, Wilson back here once again. Today is 2nd March 2026 and I'd like to make this trade review recap about my trading day today, and it's been absolutely rewarding, but also at the same time I do think that there's a lot of mistakes that I can prevent it easily. So without further ado, let's dive deeper into the charts itself. Now before we look at the technical chart, right, we have to look at the fundamental analysis on what is happening in the world. So US is having a war with Iran and Israel as well. So naturally, the prices of gold and oil will surge in price, because when there's a lot of geopolitical tensions and in the event of war, a lot of investors that's investing in the US dollar will pull out their investments and invest in safe haven assets such as gold and silver. That's why the price of gold has been surging, and since the Monday opening, it has actually get up and flew about, I think, 1000 pips. Yeah, it is about 1000 pips right here, 1000 pips, before coming back down to actually fill in the gap that has been left behind from the opening gap. Okay, now for this trade that I've took was a series of buy positions across this level right here. And why specifically at this level, and why specifically I got stopped out, is very simple, right? In order for a price to drive up to a high momentum where price reacts in just one directional bias direction, it has to first grab liquidity in order to actually drive up the real movement, to actually stop out early buyers, to build liquidity, to build movement, right? And unfortunately, when I actually entered the first few positions, I lost the liquidity because I'm not able to spot the liquidity. So it's relatively quite simple. This zone acts as a very crucial zone right here, where this key level acts as a resistance and support. So it's a break and retest structure where price breaks above, retest, goes up, react from this zone, come back down again, crashed and broke this zone, retest back into this newly zone, becoming a resistance, rejected once again, fluctuates, breaks above, retest back into the same exact zone again, and then fly up to the next resistance, which is at this very flip zone, which ideally I want to see it reject it from the first point of contact, and which actually drive which price did, and drive the price back down into the same exact zone. Now this is the point of time where I have to scale in and look at the internal movement. So when I was trading, I was also looking at the depth of the market, which I'm able to see how much like buying volume is presented, and there are a lot of like buying volume as compared as the selling volume. And when this candle shoots down, right, I'm actually expecting a liquidation already. So I'm just expecting price to react from this zone and just go up. That's why I actually took the first few entries right here, but it did not react well. Instead, price actually come back down and swept this low right here. Now we also can see in the 1 minute time frame now that this low has been taken out first, because it acts as a sell side liquidity, whereas price can actually take the internal lows for liquidity before going back up. And ideally what I want to see is that price actually breaks above the internal high, which is here. We can put a market structure shift, right, before going back up, right? So ideally what I want to see is a retest back into this zone, liquidity swept, market structure shift, come back to this bearish flip zone again, which is your internal resistance, breaks above, retest, and buy. That's your ideal setup right there, right? But unfortunately I got stopped out, like I said, and subsequently I actually took a very high risk buy entry at here, 4347, which is around here. So upon price come back down again, swept this internal low, I know for a fact that it's a liquidity sweep. And if I'm wrong, and I'm wrong, right, we take the loss and we move on to search for better entries, right? But after price actually closed below within this range, right, and the next candle actually pushed price back up, right, it did not break below. Now if it breaks below, that's a different thing, but it did not. It actually flipped and it actually pushed price back up in that zone. That's why I actually take a very high risk trade right here, and my target is actually 41 4315, but I ended up closing it early because I was scared, right? I was being FOMO, right? So this is the first setup that I actually took. We are disregarding the bad quality setups. Yeah, let's just filter that out. Right, afterwards, we can see that your newest support is actually being formed here, because this is your bullish order block right here. Yeah, bullish order block. Whereas we also can see that there's also a RSI divergence, and I actually went for a lot of buy entries as well across this level right here, right here, right here. I think right here, right here, right here, somewhere along the line of there, right, where which price actually failed to break above, because if price actually goes my way, I'm actually looking to take profit at this next buy side liquidity, which is your BSL, but unfortunately it stopped me out, right? And then now I'm actually looking to switch for sells. Now, mind you, this was actually pre-New York session. I think this was during, this was during New York session, right? Where price, at the start of New York session, price was very, very choppy because of this entire build-up action right here. So it's been very, very choppy. What we want to ideally see is a very big bullish or bearish candle closure before we actually choose our directional bias for that session itself. And one thing that I can see is that when price failed to break above this high right here, right, this acts as a internal resistance really, where price respects the level 3 times, right, and it starts to reverse back down, and then maybe you can say this is a head and shoulder pattern or whatnot, but I don't really look at candlestick, I look at the overall price action itself. And when price actually breaks below this low right here, I can actually see that there's a lot of bearish movement right here because of this bearish candle closure. It's a very big fat bearish candle closure. And when price actually retests back up to this level or somewhat, right, I actually took a high risk to high reward trade setup again. Now the reason is also because of conviction, right? Ideally, when the war is happening, right, a lot of people are looking for buys, but institutional buy orders has to be filled in at a level where retail buying orders are liquidated. So I'm really looking for that kind of a short-term long but a long-term sell, where price can correct the entire movement to liquidate further buyers in the market before I look for an actual buying swing position. I hope I make sense, but yeah, my conviction is that, and I actually took a sell position, and my initial take profit that I wanted to take profit back was at this support level. Now of course I was also very convicted to actually grab this low right here, but because I'm doing a funded account, so I don't really need a lot of profits because I'm still trading in the evaluation phase, so I will remain controversial and take necessary profits to remain profitable, right? So the first initial sell order that I actually took was this, right? But in the 1 minute time frame, price was moving very crazily. Like 1 minute candle closure is like 70 to 100 pips. In one point of time, I was up at like 450, but immediately when price starts to reverse back up, I got scared. I almost shot myself, right? And I closed the position, right? No, that was a joke, but I did close the position, right? And that made me about like $200, which is okay. 100 pips, I'll take it, right? And then I look for buy. Why? Now, because I was scared of this candle. Look at this candle. Look at this bullish candle. I was scared, right? I have a conviction, yet I was scared to stick with that conviction because maybe it's the lot size I'm playing. Maybe it's because of the over leveraging, or maybe I'm just scared, So it happens, right? But after that loss, I actually take a quick breather and reanalyze my directional bias again, and I actually entered a sell position upon confluence of this bearish candle. No, wait, I think it was this doji candle. Yeah, this doji candle tells me everything really, because price is trying to reject back up, but it has failed and come back down again, and it tried once again, but it failed because of this hammer candlestick right here, or wick, or selling hammer, or whatever you want to call it. To me, this is just a doji candle. And upon that, when price starts to reverse back down, I immediately entered my position again, and this risk, my stop loss was very tight. I think it was here or here, somewhere around there, and my take profit was at this zone, exactly at this zone, because now I know that my conviction is going to play out, right? So I held my trade and I actually took profits, which you can see here. So all in all, today she made about around 700 USD. Let's round it up to 700 USD because it sounds so much better than $690, right? And for the funded account, we have a profit target of 8% of 10K, which is about $800. So now that's left about like 100 US dollar right before I pass this account. So yeah, I'm really glad that I'm able to take these trades today. Now, of course, at some point of time, I will also increase my risk exposure and my psychology wasn't in place. But I actually learned that if I have a conviction and I look into the macro scale and the micro scale of the time frame and the buy orders, the real-time orders and whatnot, right? Actually, I shouldn't be afraid of like 1 minute candle closures, because ultimately what we're looking at is the higher time frame. It's not really the 1 minute candle where you can just, you know, go up, down, go up, down, go up, down. But overall, what I want to see is, although it has been consolidating up, down, up, down, up, down, but I want to see the real move happen and hit my take profit, right? So yeah, that is about it. That sums up my trading day for today. I'm only going to be trading funded account, and I'll be slowly scaling more funded accounts as time goes. I just want to prove to myself that my trading concept works, and hopefully my discipline and psychology stays in place, because this is a very hard thing to master. So once I'm able to actually get rid of my bad mentality, even just now when I was trading, I was losing it, man. So I'm glad I was profitable today, and hopefully the upcoming days, weeks and months, I will always stay disciplined and stay to my fixed risk to reward. Actually, the 10K funded account, the risk, I'm only risking about, I told myself this, I'm only going to risk about $75, which is 0.75% of the account, but from what you see during in the history, I actually lost more than that. So I already broke my trading plan. So I'm going to really take this time off to actually reflect and reinforce this strict risk management plan. So hopefully in the next video, you will see me grow as a person, as a trader, as a more disciplined trader overall. Right, that's it. See you in the next video. Bye bye.